Bitcoin is trading back to levels not seen since November of 2024, which is really not that long ago, but has people in a major panic because we're trading below 90,000. I would argue that if I told you 6 months ago or even a year ago that we'd be trading above 90,000, you'd be celebrating. But here we are in the depths of an emotional bear market, probably because altcoins look like absolute stir-fried shit and continue to die and have probably never really seen a bull market of their own in this cycle. Luckily, I don't have to sit here and cope by myself because I have Andrew and Tillman to do it for me. You guys don't want to miss yet another great Tuesday morning show with the boys. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of No Streets, because there's no streets left. It's over. Dude, look, I changed my intro for these guys. Did you like it? It just came right. Stir-fried shit. That one came to my mind right when I said it. This is what happens when I'm like extreme lack of sleep and suffering insomnia. The jokes just get better and better. You're the one who's supposed to be not sleeping, Andrew. You had your 17th child.
Yeah, it is. I've lost track. I've got to be honest. I've lost track at this point. Whenever something like this happened, hey, pull out all the stuff we used a few years ago. We're going to reuse all that stuff. Pull it back out.
I think he's inspired by Elon, the new baby.
I was going to call him the Nick Cannon of algorithms.
I'm keeping the Nick Cannon. All right, that was a low blow. That was a low blow. Okay, I'm working on keeping the globe populated. All right, I'm doing my part. I'm really doing my part. Oh, by the way, and I'm raising these folks to be crypto investors so that we don't have moments like this in the future. Okay.
Wow. See, this is good because Tillman, he's going for mass extraction from birth, which is what we've seen for the meme coin. You have more children so that you have more people to eventually, dump liquidity.
Well, if you've ever been in the room when a C-section happens, I would think mass extraction that kind of actually works for that type of.
These are bear market conversations. Okay, so let's get started here. We've got Bitcoin currently trading at the very unpopular price of $88,754. Mm-hmm. ETH at 2413, down 10% in 24 hours. Solana is apparently in SBF's jail cell, just taking it at 13% here. By the way, SBF's back. I don't know if you guys saw that. This is big news. SBF tweeting for the first time today in 2 years. FTT soars, but the rest of the market crashes. Coincidence? Or can we once again blame SBF, because I want to, for price action being shitty? Look at this guy. He comes out of nowhere from jail to talk about his sympathy for federal employees.
Delusion has a name, and that name is SBF, right? The guy's been in jail for over a year, and he hasn't learned even one lesson. The first lesson when you get into a position like that is just shut up. Just shut up and be introspective and try and take a look at where you've been, where you've come from, all the damage that you. It's not lost on me that he's tweeting a few days after FTX has returned capital to everyone, right?
Yeah, maybe I'll be popular again. Maybe they'll like me a little bit.
There's the delusion, right? Therein lies the delusion. So this guy is sitting there thinking there has to be a second act for me, or a third act, or whatever act he thinks he's going to be on in the future. And the idea that, well, Ross Ulbricht got a pardon, so maybe I can get a pardon in some way because we returned the money, and that's the angle that we'll use. We returned money to people, so I'm going to get pardoned. It's sad, really. It's sad to see because he's not learned anything.
One of the funny narratives was that there's conjecture that somehow Diddy got him access to his phone. Not even kidding, because they're in the same, yeah.
Well, as I understand it, prisons now offer phones and tablets and all sorts of stuff, even though they're generally removed from the overall internet. They still have access. They have digital access to stuff. So I'm not at all surprised that
evolution. They used to say, "Don't drop the soap." Now you don't drop the phone.
That's right. That's right.
Dude, his life in there must be just. I mean, I want to see that movie. You know, it's gonna be a crazy.
Well, that movie's
Well, I would just say that if you look at the odds of him getting a pardon, he probably has the greatest odds in the next 4 years that he'll ever have. And so, you know, it's absolutely a fight for his freedom. He's trying to have a voice, and you know, there's no chance it's going to happen as far as I'm concerned. But at the same time, you can't, you know, blame a guy for trying. He's definitely, you know, without that, he's going to spend the rest of his life behind bars.
Yeah, well, his parents are lobbying hard for that pardon, but it seems like they're about to lobby their ways right into the next cell if they're not careful. If I was his parents, the last thing I'd be doing is trying to shine a further spotlight on their own actions. Yeah.
Yeah, go underground, go away. Stay away from the spotlight. There's no reason.
Okay, so, but if this isn't SBF's fault,
yeah, I mean, we're in a position now where at scale there can be you know, selling that happens in any particular asset. Once you become a meaningful asset class in the world of traditional markets, a lot more people have access to that asset, buying and selling. So you'll see days where there's, you know, $1 billion of ETFs that are purchased, and there's $500 million of ETFs that are sold. That's the nature of now liquid markets that aren't meaningfully manipulated by the likes of SBF and CZ on a go-forward basis, right?
Well, they just have new market makers and not manipulators, market makers. And here's the thing, like, I think the real story is like who's selling, not so much is there selling. Because there was $1.3 billion of leveraged positions liquidated in the last 24 hours. That's a big cookie to go after, especially if you're a legacy institution that hasn't accumulated your position yet. That's a tree worth shaking, if you will. And if you're buying, if you have no choice but buy on into a bull market, which I think, you know, everyone thinks that we are. If you're going to be buying into a bull market, you want as deep of a discount as you can get. Well, how do you create those discounts? By liquidating a lot of people, because you're getting a two-edged sword in that regard. You're getting all of the cash proceeds of those opposite positions, and you're starving out your competition to buy back in at the lower prices. Like, they're all broke. They leveraged their position.
Are you saying that big money moves markets intentionally?
I'm saying, you know, barring a miracle, when you read headlines like I've read this morning, like Citadel teamed up with Charles Schwab and Fidelity Investments to become a market maker for the crypto space. Well, how does a market maker become a market maker? They have to have enough position to inject liquidity in the market. They're going to have to accumulate a hell of a position, is the bottom line. And so how do you do that if you're Citadel? Well, this is 101. This is the first class, first day on campus. Shake the tree.
Yeah, for sure. Just so you know, Diddy's phone is too slippery to handle. It's great comments over here. This is my favorite, though. Didn't you guys chill Ethereum lately? I think you mean chill, and I think he actually meant to spell Ethereum correctly. Who paid you for that? Bybit? Okay. Yes, guys. I still like Ethereum here, to be honest. I still think it's going to do exceptionally well. And I got paid $1.4 billion by North Korea to do that. The amount that was hacked from Bybit. You guys are unbelievable. If you think that influencers are getting paid to have an opinion on markets.
So some perspective associated with this current dip. I was at a Bitcoin event in California in late October, and part of that event, that, you know, we were set up in clusters, and each cluster had to make a bet that by the end of the event, where would Bitcoin be? And at the moment, I think Bitcoin was trading at 69K. I'm certain it was.
69,420. I think.
Yeah, and so some people were like, well, it'll be 71 by the end of the event in 2 days. It'll be at 68. But think about that from a contextual standpoint. That was less than 6 months ago, folks. That was 6 months ago that we were at 69K and we're at 88 this morning. So context is important. It really is remarkable to be in a position where we've flipped the script, where institutions are doing their version of rushing towards the markets that are cryptocurrencies to make a ton of money associated with the capital that moves through the cryptocurrency markets, whether it's Citadel, whether it's JP Morgan, whether it's State Street, whether it's Citi, whether it's all of these organizations that are doing their best to offer not only product, but also offer the rails that cryptocurrency can and cannot move in traditional markets. So the sentiment is very, very different in institutional hallways because they see an opportunity to make a ton of money. They see a remarkable opportunity to make a ton of money. Whereas, the fear and greed index, I think on coin market cap is like at 25 right now. So retail is like, kill me now. And institutional is like, hey, cool, a new asset class that we can make a ton of money on. Let's go do that.
No,
Matt Hogan tweeted about that. Yeah.
They're in bloodlust right now. They want more blood. Just keep slitting throats. If they saw a big block of marginable positions, they would go after it right now. That's
you want to see the big block? Here
you
go. If Ethereum goes to about 1900, if it drops slightly below 1900, there's a free $340 million waiting for them. To whoever wins that prize. Oh God. I'm getting paid to tell you guys to short Ethereum to 1900 now.
Markets seek liquidity pools. That's just the way it is. It's like water runs downhill. It's nature.
Well, and again, that type of graphic is not necessarily bearish. If anything, it's bullish because there's a massive amount of capital waiting to buy it at that number, assuming that it's going to rocket back higher and create a return that's meaningful for those organizations that are waiting at 1900. That's the real story behind that graph, right? So,
Well, it's the Seinfeld episode where the coat's going on sale on Monday, and you've got insider information. Like, there's going to be a big sale. Like, get ready for the sale is the way I look at it. Unless you don't like Ethereum. If you like Ethereum, if you think that Ethereum is going to play an important role in this, landscape of crypto going forward, then, it's the second largest by market cap. It can't be ignored. It's been up there for a very long time. It's been responsible for probably, is much development in the space as any other, chain. So if you believe the overarching, value proposition of Ethereum, you should be looking at that chart and saying, oh man, there might be a massive sale on Ethereum.
Tillman got paid. You got paid. You got paid. How much did Vitalik send you that, my lady?
$0.
God, imagine thinking that people are getting actually paid by like Ethereum to have an opinion. Guys, Satoshi sent me a few sats for shilling Bitcoin all these years. I finally knew that my sponsorship from the Satoshi.
I think that tells you something, though, to be honest with you. Like, I have an opinion about Ethereum, and it's not rooted in price. It's rooted in the fact I used it a lot. I used it to experiment in all of the ICO craze. I used it to experiment in the NFTs. Like, I've used the product itself. And I've definitely lost more on Ethereum in fees and all the things associated with using it than anything else. But here's the thing. I know the warts. I know the value proposition, and I also know, the undercarriage of the car too. And that's what's formulating my opinion as whether it's going to be around 10 years from now and whether there is a use case that it fits so well that it's going to continue to dominate as it regards to market, market dynamics and market percentage.
Yeah, I think it'll eventually do just fine. Obviously, just circling back to this, right? The Bitcoin ETF see over $500 million in net daily outflows amid crypto price rout. I think last week was another $500 million. So roughly $1 billion, I think, in the last 6 to 7 trading days. I could tell you, we were talking about leverage being wiped. Another reason we're seeing all of this, and obviously some downside it's something we talked about with Matt Hogan on Spaces yesterday, is the basis trade. Basically, the basis trade goes through these phases where it makes a hell of a lot of sense to be long spot and short futures to basically make a lot of money. Marcus Thielen from 10X Research, who I've had on here quite a few times, there was an article about him yesterday, said he thinks about 50% of ETF buying was the basis trade. Well, that gap has closed where it doesn't make that much sense anymore. So those people, unfortunately, are going to sell their ETFs that they were buying to take advantage of that free yield on the basis trade. This isn't necessarily like paper-handed retail selling there. This is just market dynamics and, you know, people taking advantage of these arbitrage opportunities. And when those trades disappear for a while, they close them down.
Yeah, hedge funds and quant funds do this like crazy. So when you see 13F filings from, you know, Renaissance Tech or Citadel or whatever, and they've got, you know, whatever, you know, $400 million worth of Bitcoin ETFs, they're not holding that as a long-term hold. In that moment where they had to file the 13F, that's what they had on their books. And it has much more to do with a couple trades, again, like this basis trade. Renaissance Tech doesn't hold anything for more than about a day. Matt is absolutely right that there is a portion of the Bitcoin ETF trade that is a basis trade, and there'll be evolution versions of that type of trade and that type of movement in Bitcoin as an asset class. But again, let's go back to the fact that there is now a growing ecosystem around Bitcoin and TradFi. Remember that before this week's version of it with MicroStrategy, the previous week, MicroStrategy raised money from Morgan Stanley, Goldman Sachs, Citigroup, and Barclays. That's very different than the second-tier banks that they have been raising money from. So we now have the biggest global institutions on the planet competing to get their hands on in 4, 5, 6, 7 different ways associated and adjacent to Bitcoin. That's a real thing, right? That's absolutely a real thing. So, you know, I also find it hilarious that we're in this, you know, the world's falling apart moment associated with price, and the fear and greed index has tipped so far to almost FTX level numbers, when in reality we're down what, 20-ish%?
Off the high.
Yeah. In previous cycles, this moment was like down 45% or 52% or 71%. This is comical, frankly.
We were at 73 last month.
Yeah, we were at peak greed, and now we're at extreme fear. That is really, really hilarious.
I think last time we were at extreme fear, we were in the 50s. I saw a tweet about it. I can't confirm truth because, you know, not everything you read on X is true, but it felt right.
The deck is getting shuffled, and it's getting shuffled from tier 2 players to tier 1 players, and that's gonna trigger huge liquidity events. It's gonna be a violent shaking, if you will. Grayscale was the vast majority of those outflows in ETF, and those are legacy people. Those aren't new, fresh. I'm putting this as 1% of my portfolio, and so there's just a new buyer that's in town. And the market's been so hot that we still have a lot of crypto speculators. We still have a lot of, you know, people playing on big margin. And when that gets attractive enough for the big fish to go out of their way to make it happen, it's going to happen, because you can't create new supply. We can't go Bitcoin, let's do 50 million, let's do 100 million. There's no new supply. So they have to create the supply from creating fear. And that's exactly what this is. But relatively speaking, I mean, like you guys are saying, this is a pretty minor dip. If you've been around for a while, this is like nothing.
It's just, I think this time it's just that like altcoins are dipping and they're already down like still 80 or 90%. So I think that you're just seeing that, you know, the bulk of participants in this market are not grown-ups who have Bitcoin. I was making this argument yesterday on Spaces. And I basically said, like, I don't think 90% of the people who would describe themselves as like crypto natives or full-time participants even own a SAT.
Yeah,
I think that most of them got wrecked on NFTs. Now they're getting wrecked on meme coins. They're deep in Solana and other layer ones. But I don't think it's like the past where people are denominating their portfolio in Bitcoin. They just don't own it. So they've missed, there's been no bull market at all.
But
the retail's different. It's unhinged from institutional
Yep.
this
Yep.
go around.
First of all, let's take a moment. Tillman with the data drop on the grayscale being the bigger portion of that.
Well, I think they were like 60 million yesterday of the outflows.
I'm not used to that kind of alpha coming from Tillman. That's a big deal. I'm impressed personally.
Big numbers.
Well,
Big numbers.
listen, the story
Best
of this, I've been wondering how they were going to accumulate their position, because Citadel coming in, like that should be on the headline of all headlines. That there's no bigger news to me than that, honestly. When Bloomberg reports that Citadel and two of the other biggest institutions on the face of the earth, financial institutions, are coming in to be market makers, that's going to cause some blood to get in the streets. But it's a great problem to have. I mean, those are the most sophisticated market makers that exist on the face of the earth. And if they're willing to come into our market and play the game, it means they're anticipating a lot of volume. And I mean a lot of volume.
But to be clear, it doesn't mean they're bullish on crypto. They're bullish on making money on crypto.
That's right.
They have to be bullish on the adoption of crypto, which,
yeah.
What's the difference? It's a distinction without a difference, as far as I'm concerned.
Well, they're just following BlackRock and Larry Fink in that space, right? So BlackRock and Citadel are joined at the hip in opening up the TXSE, the Texas exchange. It's going to compete with all the other exchanges, and that'll happen sooner rather than later. And again, crypto has moved traditional finance in a way that most people haven't taken notice of, right? So Charles Schwab going to 24/5, so 24-hour trading 5 days a week. That's a movement that would not have happened without the existence of crypto overall. All the other, exchanges / broker dealers will end up going to that number as well. And then at some point, my guess is that the Citadel Black Market initiative in Texas will be a 24/7 type of deal. We almost have 24/7 trading. And again, people don't know this, but we have 24/6 trading in the futures markets, right? So there's a little bit of space on Saturday to Sunday where futures markets don't trade. So it already exists. There's already some guardrails that exist there. So we'll get to that moment. But again, crypto has been the one that's pushing this into the.
Well, and speaking of the futures market, I think 500 million was liquidated in futures contracts. So 500 million of the 1.2 billion was Bitcoin on futures. That's an interesting. Listen, I look at the shift in this cycle versus the last 3 cycles that I witnessed, and it's radical. I mean, it's the players are all the biggest players are in the arena. They have all taken center stage. They're fighting for center stage, and the game's afoot. Like if you don't think big drops are going to happen when big players get involved, then you don't understand market dynamics, because that's how they accumulate their position. They can't even play without doing stuff like this. So I look at it as a huge positive, and I also look at it as a huge positive that Bitcoin is weathering the storm. It has enough support that we are holding ground very well compared to other cycles, and compared to like you said, the altcoins, Bitcoin dominance is going up, and it's going to continue to go up, and that's kind of the key indicator of this. What's different about this cycle is that the institutions are driving it, and they're driving it in Bitcoin.
It is we by the way, we've seen, again, having been through different cycles, the meme coin, like you said, that market getting absolutely fried. That's no different than the ICO markets back in 2017.
Yeah.
I mean, VeChain, Dragon Chain, everything that had a chain connected to it.
How much is your pudgy penguin worth today?
Those are worth a lot, I think, actually. But it's your everything.
Well, I'm pointing out the best of the best.
I was going to say, I think you pointed out the only good one. But I think pumps are still worth a lot. But how much is your languishing lion? Or you're like,
no, mine was
bombastic beaver. Like I have no fucking idea.
my 𝗘𝗫𝗖𝗛𝗡𝗚. That's I need to find out how much my 𝗘𝗫𝗚𝗡𝗚s
You don't know one of those?
Good.
Pick the
I
rapper
bought the supply
Chameleon
up, buddy.
there,
I
actually.
don't know. I own the entire supply. I bought up a quarter of it.
One day,
He's
man, that's
cornered.
gonna pay for your kid's college education. For sure.
He's cornered the market on chilling chameleons. Yeah. So again, we come back to in these moments. This is where real money is made, and the best investors that have ever lived, the best traders that have ever lived. They have axioms that remain true. When there's blood in the streets, you buy. When everybody's fearful when everybody's fearful and scared, that's where you gobble up as much as you possibly can. Whether it's the Warren Buffetts of the world, or the Larry Finks of the world, whether it's the Paul Tudor Joneses of the world, these guys make moves when there is real volatility and volatility to the downside. And then they hold those positions much longer than most people hold those positions. So anybody that's buying now, a large percentage of those folks, when we go back to 101, 103, they'll exit those positions. But people that buy a ton now and are the Paul Tudor Joneses of the world, they're going to hold until it's up to 170 at least, right? Larry Fink thinks it's going to 500 to 700K over the next 4 years. So, it's a difficult thing to do as a human, because humans are consumed by either fear or greed, the latter being emotion that's more powerful than the former. So it's the kind of thing where it is very difficult to do, but if you can pull it off, you end up being somebody that's in position to have benefited from moments like this. That the picture that you showed that showed that greed was at 73 1 month ago, and we're now at fear 25. I mean, that's a remarkable thing. I mean, that is a microcosm of the human condition right there. The microcosm of the human condition. It absolutely is.
Yeah, it's like anything. If you're chasing it, you're behind it. And if you're chasing price, you're always going to feel behind it. And like the most prudent method that everyone deploys that have significant means, these big institutions aren't buying 40% of their stack in one purchase, or in 1 month, or in 6 months. They're accumulating. They're buying the dips. They're looking at it as something that they want to own. If you want to own bricks, if you want to own cars, if you want to own clothes, cologne, shoes, what's the best way to accumulate them? When there's big sales. And so, you can determine what a big sale is to you, and you can factor that in, and you may be more prudent than the next guy, and you may wait for a 15% dip in price before you start buying. Somebody else may accumulate if there's a 3% dip, because they have a larger stack to accumulate. The bigger the stack that you have to build from scratch, the longer it's going to take you to accumulate, especially if you don't want to incur risk along the way, or want to, avoid as much risk as possible.
Yeah. Well, one of my, slightly pivoting, one of my best friends, he may work at an institution that we've mentioned today. He may have been there for a very long time. The CEO's name may rhyme with Ben Triffin. And it might be called something that rhymes with Citadel. And as usual, I get the Monday AM 5 o'clock text. What's up with Bitcoin, dude? And I say, yeah, it's not doing too great today. What do you think? And he said, candidly, and he might know some things, said, candidly, the opinion on the street right now is that people are absorbing the Bybit hack. Everybody in crypto knew about it last weekend, but Wall Street found out that one of the biggest exchanges got hacked for $1.5 billion yesterday. That's when they found out, because Bybit's not in their news feed.
No.
He said, quietly, nobody likes Trump's policies very much on Wall Street, even though they outwardly say so, because they're obviously fearful. But as much as we all like deregulation and all those things, long term, in the short term, markets hate uncertainty, and people are very scared of what he'll do. And number 3, they think that the Trump and Libra token, which they've only seen kind of casually as side stories have really fucked this market.
Yeah, there's
and I've heard this a number of times from, and I'm not talking about institutions that are trying to buy Bitcoin or add just like market narrative as to what's happening right now. Trump, they think has been horrible for crypto short term, but will be very good for it long term as all the actual policies and people he's put in place.
Yeah. So all due respect to your friend, but most of that commentary is relatively stupid because Trump coming to power and the markets, the crypto markets, knowing he's coming to power, have pushed Bitcoin from the mid to late 50s up to the hundreds. The adjustment in regulation associated with the SEC being defanged, pro-Bitcoin people being put at all the different agencies that have to do with money, again, have pushed Bitcoin and crypto to new highs just, oh, by the way, let's call it a month ago. So, being a prisoner to the moment doesn't make any sense. Trump has completely removed enormous amounts of regulatory heft on the shoulders of the not only the asset class but innovation associated with crypto and AI and all the others. So while they may have gotten comfortable with nothing happening and regulators saying no to everything for 4 years, there's a shift and a change and opportunity that exists. And while middle management guys may be have some interesting commentary, their bosses like the Ken Griffins and the Larry Finks of the world are rushing into this space as if it's a gold rush. So there's my thoughts on his opinions.
Well, I just think it's
I said, long term. They do believe that everything he's going to do will absorb long term, but they think all the every day we have no idea what we're walking into and launching meme tokens, maybe not great.
Yeah. Well, I would agree. I think it's in the short term doing those things highlights the dangers of the technology rather than the value of the technology or the efficiency delta that it can create. And so it's just like anything, there's an educational curve that Wall Street is on that we've already been on. I'm not fooled into thinking that all coins are created equal, whereas I think a lot of them still are. And I think that the natural progression of having things like the Libra coin blow up in everyone's face and the Trump coin and all those things, that's only going to teach them more about Bitcoin, in my opinion. It's going to take a little bit of time, and there will be negative sentiment because they don't understand the difference. But ultimately, the technology speaks for itself, and it continues to echo the same tune for the last 16 years, and it will continue to echo it into eternity. And that's the beauty of the network that Bitcoin is, that those other ones aren't. And so I think the dominance level is going to get that much more. I do think guys like Larry Fink understand that. I think that he's also not short-sighted enough to understand that tokenization is here, and we're going to have to tokenize everything if we want to create markets that are open 24/7 that don't have a bunch of people behind the screen, pushing buttons. The only way to create those automated workflows is through smart contracts, through this tech. And so, the future's here. It's not going anywhere. But in the meantime, there is a lot of head fakes that are going to cause a lot of people to have negative sentiment. I think there's two ways to look at the Bybit hack. Yes, there is one side of the coin where you're like, how could they get hacked? And if they could get hacked, anybody could get hacked, right? But really, if you think about it in another context, is they got hacked because people knew they were holding $1.5 billion worth of Ethereum. And that makes a very attractive, mark, if you will. The whole point of this industry is you can be as decentralized as you want. Out of convenience, because they serve a lot of customers, they're forced as a business model to not be decentralized. If they were just cold storage walleting all of this coin and not moving it around every day to provide liquidity to a market, then there would have been no issue. The issue is that they're playing a role that's never been played before. And I would take the stance that they have done an exceptional job at absorbing it. The fact that they have one-to-one coverage and was back up to fully operational in 12 hours, Show me a legacy,
They
exchange
stayed full.
that
Actually, I mean, as far as withdrawals, they never, I don't even think it was 12. I think they never stopped servicing withdrawals. So it's pretty incredible.
they never stopped servicing withdrawals, but there was about a
Yeah.
12-hour delay, basically.
Okay. Yeah. Gotcha.
And so, I mean, that's remarkable. So, if you're thinking, oh yeah, Bybit got hacked, that's negative news. Yeah, that's negative news. But here's the positive spin on it. They're so big that they absorbed it in 12 hours, and it's business as usual. And it's not going to affect any operations going forward. It's only going to affect their future VC endeavors. Like they're not going to make the same capital investments into peripheral businesses that they once were. That's ridiculously bullish in my opinion. That's insane compared to what we experienced with FTX, where they didn't have one safety protocol in place. They didn't know what to do.
They also didn't have anyone's money.
Right. Exactly
Yeah.
right. The Bybit thing was also it's an exercise because there was an enormous amount of folks in crypto and other exchanges that came to that were on the ready to assist Bybit in the process, and very, very quickly. Whereas in the traditional financial world, not only does that not happen, but they have to go to government. It takes months and months and months for the government to potentially act and provide a backstop. And all the while, their competitors are trying to eat them and destroy them in the process in hopes that they're going to acquire them, right? So very different responses in the world of crypto versus traditional finance, which again bodes well for the crypto space from a long-term standpoint.
I worry about that, honestly. When I heard I was on a Spaces with a CEO of Bybit, and he was talking about all the people that did come in and help. And like, I'm all for that, right? We don't want to have market disruption beyond what is necessary. But that market disruption points to need, and that need gets solved by innovation. And that's a better outcome than shoestrings and duct taping in the emergency. And I do worry about contagion issues. Like, I know one of the groups that lent them a lot of, I think 10,000 Ethereum, or, a lot of Ethereum, maybe even more than that, 30,000 Ethereum. Did it without a paperwork, just on a handshake. Just say, hey, y'all pay us back when you can. If it was a 1-2 punch hack, all of that liquidity would be sucked out too, and it would be bigger. Like there needs to be firewalls that are created in this industry, just like there are in every sophisticated market, and you can't breach those. And so if in the future, I think this points to a massive need, and Michael Saylor could be the person to do this in spades, is do insurance products for holdings, like step in with cash that you've earmarked on the side, just like Bybit did. And Bybit did it, they self-insured and did it very successfully, but you can't expect everyone that's a startup to do that. So there's this real need for, like, okay, if you do get hacked, what kind of protocols do you have in place to avoid getting hacked? And what kind of assurances can you pass to your customer in the form of insurance coverage? I think that's going to be a standard that will have to be addressed here in the next 12 months.
I mean, you live in Colorado, you remember the weed days when you could do whatever you wanted at the state level, but you couldn't put it in a bank. So you were running around with cash, and you were basically self-insured by the cash that you had because you couldn't get insurance for your business. Kind of in that phase to some degree. It's not like Bybit can go out in China probably and get the assets that they're holding insured. It took a lot of people, by the way, to kind of plug this hole.
Oh yeah.
I'm looking. BitGet gave them 40,000 ETH. MEXC 12,652 ST ETH. Binance 11,800 ETH. I know that like FalconX and Galaxy help them on the OTC side to actually buy back what they bought. That all plugged about 80% of the hole. But luckily, we also had the structures in place that they didn't just go on the open market on their own exchange and like buy, $1.4 billion worth of ETH. But it's still the Wild West to some degree. In this case, though, being relatively decentralized industry where people were friends, it benefited probably more than if this was an FTX type situation.
Yeah, my response
would have been a bankruptcy. This would have been an immediate bankruptcy in
well,
the US.
and probably a domino effect through a lot of other companies as well.
And my response, the Tillman's response, would be: at no point in your long answer did you make it. It's I think that the involvement of crypto at large, yeah, it's Adam Sandler reference. Yeah, I say it to him often. So I think crypto being involved in holding somebody up. Again, look at the differences between Binance and FTX from let's call it 3 years ago. Massive differences in responses to certain things, which goes to the quality of liquidity associated with crypto exchanges then versus now, right? So all of those helpers would have nothing to do with Bybit if they even had a sniff.
I just don't know the terms of the help, and it makes me nervous that other consumers' money is being put at risk. Is I guess the point. If I don't know whose money that is, if that's all profits that they're sitting on that they have full control over, great. But there's active ways that sophisticated markets, quantify this risk, insure against the risk, and manage it. That doesn't involve like a red button where he pushes it and it wakes up everyone in the industry and says, we need liquidity. That doesn't evoke confidence in me. That evokes fear in me because it's not systematic. It's not.
Oh yeah, this was like call up all your friends as fast.
That's what I mean. Like
there was no automated system that says these exchanges send us this much to plug this hack.
Now, granted, I will say that from what I can tell, the only reason why they did that was just to avoid customer service interruption. Basically, they still had the money; they could have made good on all of this and continued operations.
It was to service the withdrawals quickly. I mean,
exactly. So I don't think they could have handled any better. So I'm not nitpicking on them, but I am saying that the industry, if it can happen to them, it can happen to anybody. And unfortunately, the vast majority of companies that if it did happen to them, this would be an extinction event. It points to the fact that there's some gaps of coverage that we need to address in this space, is the bottom line. So yeah, that would be my 2 cents.
Yeah, well, maybe it's a good time to pivot to what you should be doing automatically when the market is dipping.
Yeah.
To that.
Yeah, listen, we've built processes and we've built algorithms and strategies that feast on moments like this. And again, you go back to the fear and greed issues, right? So if you're using a tool, Arch Public's crypto tools, and announcing today that we're launching Ethereum and Solana algorithms alongside the Bitcoin algorithm that can do all the things that we've talked about the Bitcoin algorithm doing. But if you have processes set up and in place that are buying the dips when you're down 2.5%, 3%, 4%, 5% without you having to think about it, that are also selling the blow off tops without you having to think about it, but doing both of those in a way that you have a net long bias, so you're still stacking that particular asset, that removes all the quote unquote, when do I sell, when do I buy, I don't know what I'm doing, and now the fear and greed index is nearly under zero because I have no idea what to do, right? So to have a tool where you're making decisions outside of a moment where fear or greed or panic is at the highest levels, where you've given some real thought as to, I want to accumulate this, I want to accumulate that, or I want to slowly sell some of this as a percentage, and I want to accumulate some of that as a percentage. Having tools that allow you to do that makes these moments feel like opportunities as opposed to problems.
Yeah, they're moments to take advantage of. But not done with a knee-jerk reaction. It's like methodically laid out beforehand. And when it's like having a fishing lure with a bobber in the lake, when the fish comes, it pulls the bobber down and you're notified. And so it's completely emotionless is the main part. And you can customize it to your preferences. You can say, again, I think that Bitcoin's on sale when it drops by 10% in a 7-day period, and that may be your rule, and you can set those parameters and forget it. And guess what, when it drops by 10% in 7 days, it's going to trigger a buy order, and it's going to trigger a buy order to the quantity that you would like or the dollar amount that you would like. It's completely customizable. But the best way to really get your hands on it is that we've made it free to use. So if you want to buy up to $10,000 of Bitcoin every year for eternity, there will be no cost for you to use our software. Just go to our website and click on the Bitcoin algo, and we'll be happy to teach you how to use it and set you up with the knowledge base that we have as it pertains to the feature sets. And then seeing is believing. You'll determine how valuable it is to you going forward. But it really is something that retail has not been given the same toolbox that trading desks have as it relates to automation and setting up those automated buy schedules.
And our crypto algos are truly institutional level tools, and here's why we're able to say that. So it's not, most people think of an algorithm as a binary algorithm that creates a binary output. Our crypto algorithms, you can set up 5 or 6 different versions of how you want to buy or sell or trade a particular asset that are all happening at the same time. They may have different time preferences. They may have different price preferences. They may have different size preferences as it relates to percentages or dollar numbers. But you can have 5 different strategies working inside of our algo. You can't find that anywhere else. That is institutional level evaluation of a particular asset and then making, taking trades associated with that asset in ways that are as sophisticated as you want to be with it. And, giving the retail an opportunity to get their hands on something like that for free. It's never been done in this space.
I have a really important comment here. I'm sorry. I have to.
Okay, ready.
I don't want you to show your program. Just tell us if the bull market's over. Guys, this product is amazing, but tell me the future now or I'm fucking out of here.
But listen, the reason why this product exists is because nobody knows if the bull market's over. You don't play the game like that. We'd be liars if we told you we knew it doesn't exist.
Andrew, you had tweeted this. Is he the guy on the right or the guy on the left?
Definitely the guy on the right.
Yes, stage right, stage left, right, left. Dude, shut up and tell me the exact price of Bitcoin in 6 months, or I'm reporting you to the police.
Again, I will say that not only is our Bitcoin algorithm and the entry-level version of it free, you can set up a bunch of instances, but also our Ethereum and Solana entry-level versions are free to use. So
big announcement.
Yeah,
we made a very big announcement in a very passive way because we were laughing.
Yeah. So all 3 of those assets and the algorithms that go along with it are free for you to use, and it is. Listen, we want people to be involved with Bitcoin. We want people to be involved with crypto, and we want people to come up with a version of what they think is a plan and then allow a tool to walk that out for you. If you don't have a plan, you're gonna get hammered, right? You're gonna end up as the guy on the right in that previous.
And it goes back to something that I tell people. I don't ever meet anybody that says I own too much Bitcoin. I always meet people that say, including myself, boy, I wish I had bought more when I heard about it. And boy, I wish I had more now. And, like Andrew said, this is something that if you set your goal in the software itself, the goal is going to be met. It does it for you. So if you want to own 1 Bitcoin by X date, and you want a purchasing schedule that you can work with and look at exactly how much that's going to take out of your monthly budget, this has all of those planning tools in it. So you just put the variables in, and it's going to show you exactly what the historical performance is inside a trading view. So you're getting third-party verification from the biggest trading platform.
Yeah. And another reminder that 77% of all trades across the entire globe, everywhere, are done algorithmically. They're done by computers. There's a reason why there's like 4 people on the floor of the New York Stock Exchange these days. Nobody needs to be there. That 2 decades ago, there were 5,000 people down there shouting at each other. That doesn't happen anymore. It all gets done via computers. So that has been siloed in the world of institutional banking for 40 years. We've brought it to retail folks watching the show and anybody else, and then taking away the last proverbial gate associated with this and making it free. So you have the opportunity to get your hands on it and use it and test it. And we love what we do, and we'll continue to create products so people can benefit.
That's at archpublic.com for those of you who can't read. It's right there at the top, archpublic.com. But there's a lot going on here. It's funny, we keep sharing the Bitcoin algorithm. All the money's kind of being made in the concierge program. But hey, I appreciate that we keep sharing the very free, very successful products. It's a good thing.
Well, listen, there's so many things. Seeing is believing, and this is user-driven software. They can get their hands on it, they can control it, they can manipulate it any way they like, they can turn it off and turn it on, they control their money. There's nobody else in control, and we don't hold any funds. We don't know when you trade. So there's a lot of things that we anticipate being questions in people's minds, and so seeing is believing. Well, the free program allows you to absolutely know exactly what you're getting into, and to answer all those questions for yourself, and to feel really good about the answers.
Yep, absolutely. So any final thoughts? I saw a great comment here that somebody said that these guys would tell you that Ben Zhao is the man of the year. That's the CEO of Bybit. I know Ben, dude, and my take on this was, man, good job of the recovery, but you shouldn't have gotten hacked in the first place. They fucked up bad, guys. Like, there's no... just to be clear, you can praise somebody for the result, but you can still say this should have never happened. They didn't have their protocols in place, and it shows you the risks of leaving coins on exchanges or trusting centralized entities, and that you should self-custody. Those two things are not inconsistent. But yeah, they messed up bad.
Well, there's a huge topic we didn't discuss, and maybe we should touch on it, but are they going to roll back the chain? I mean, that to me is a massive question that has to be answered in very short order. I think 10% of the Ethereum's already been liquidated through, mixers and the like. And so, I've seen Samson and Vitalik and a bunch of other heavyweights on Twitter talking about rolling it back.
Vitalik was not talking about it. Yeah.
No, he wasn't talking about it, but a lot of people were talking at him about it.
Yes.
Yeah. And I guess the question is are they going to? And I personally think it's a damned if you do and damned if you don't scenario for Ethereum. I think they're kind of screwed either way, because if you don't roll it back, you're looking at the largest aiding and abetting. It's
not Ethereum. Like this isn't an Ethereum hack. This is a human being centralized system hack that happened to steal Ethereum. If they had stole a whole shit ton of Bitcoin, what would the conversation be? It's like that's like pretending by these maxis that Bitcoin's never been stolen in size.
It just enters.
Roll it back.
Yeah. Well, I don't know the right answer. I don't pretend to. I just know that this is going to be good for Bitcoin is the way I look at it. And I also know that, the fact that they even are talking about rolling it back points to centralization. It kind of blows them up either way, right? It's not a position I would want to be in.
Oh man, it's I agree, but it's just that the tribalism is funny. Seeing exactly who was screaming for the rollbacks, because they just basically, they're like low key trolling, right? They're making the exact point that you did. A Bitcoin maxi saying roll it back, or tweeting at Vitalik about that is basically telling you there's the possibility that you could roll it back, which is what they want you to know.
But there's these unintended consequences to the crypto market that do have to be addressed, and they have to be addressed in big ways. Like the fact that you can launch that the president of a country can launch a meme coin and extract, hundreds of millions of dollars out of the US economy on a Friday night, that has to be addressed. And the fact that terrorist organizations, the Lazarus Group, is that the one that is, I guess, taking credit for this? I mean, they're North Korea, like they're gonna $1.6 billion. Something has to be done to where they can't spend that money on bad things, is I guess the point. And if we don't, as an industry, come up with really good solutions, outside regulators will. That is a foregone conclusion.
Yeah, man, what a shit show this industry. I can't believe I, on this very stream, got exposed for being paid by Ethereum and Bybit and the Chinese government.
Yeah.
And Satoshi.
And that I got exposed for not knowing what the price of any
But the
of these
price of
assets
Bitcoin
would
is
be
going to be
in
in
6 months.
6 months. Yeah, absolutely.
Guys in the comments, I love you. If we dunk on you, it's like brotherly love. We love you all. It's not an insult. You're welcome to come back, except for that one guy. No, you can all come back. We're not blocking you. But listen, if you want the answer, Bitcoin crashing, crypto nightmare is the worst yet to come. Altcoins, there's very little signal right now to predict an altcoin bottom. I still think that most valuable altcoins will do exceptionally well, personally. Like, I think Ethereum will do well. I think these are dips to buy generally with a long time frame in mind, but don't come back in a week and be like, Solana's 10% down from last week.
So if you made it this long and this is stream and you want a little bit of signal, would it be the worst idea in the world to take the assets that are in the Build BlackRock little thing that they're doing over there in that particular fund and take those tokens and be involved with those? If BlackRock is accumulating assets to build potential products on, and I think there's 4 or 5 of them inside of that little grouping, those seem like reasonable assets to take a good look at, right? Meme coins and the like, that's a tough spot. But if you align yourself with what BlackRock is doing, good grief. If you align yourself,
this one's better.
Yeah,
spelled it so well.
Meeker is a Russian. What you get all shapes and sizes. I get the same stuff. Reply guys, they're all over the place.
I'm gonna be honest. The 1.5 billion in liquidations, that was me.
Yeah.
I was using this.
The liquidator.
This is what you guys are doing in the chat. Anyways, Andrew has a baby to go take care of, and Tillman is gonna, go buy more Bitcoin with the algorithm. And I have
we go shovel snow in Colorado. That's the news of the day in Colorado every day in February.
Meeker, LOL. Meeker is the guy who sends me DMs of financial advice. That's probably accurate. Scoot Meeker would like you to join his private Telegram group. Send me 1 Bitcoin. He'll send you 2. Fuck, it's so bad. Vinny would like to know if that's a fleshlight. No, it's a water gun, but I like where your head's at, buddy. Guys, we are done. I can't do it anymore. Thank you, Tillman. Thank you, Andrew. Everybody, check out Arch Public, archpublic.com. We will see you next week. Bye.
You guys.
That's dope.